off. Business news now. Brian Quinn's here, looking very fit. He's starting here in Paris. Policymakers of the worst up economies are meeting amid major strains on the global financial order, Brian.
Stuart, Finance Minister, central bankers of the G7 group of developed nations have gathered in the French capital for 2 days of talks. They're being hosted by French Finance Minister Roland Lescure. He's warning that severe economic imbalances are putting major strain on international trade and threatening financial markets. Overconsumption in the U.S., anemic consumption in China, and underinvestment in the EU are some of the structural issues on the agenda. More specifically, though, ministers will be looking for more concrete updates on how the U.S. plans to reopen the Strait of Hormuz amid the ongoing Middle East conflict. Also, how G7 countries can reduce their dependence on China for the rare earth minerals that are critical to global high-tech supply chains. Meanwhile, an ongoing sell-off on government bond markets is rattling policymakers amid fears that G7 national debts will become increasingly difficult to finance. Here's Lescure at the opening of the summit this morning.
At a time where global imbalances are suddenly unsustainable, at a time where raw materials and critical minerals have become critical in the supply chains of the world, and at a time where the most vulnerable countries are faced with a crisis that's affecting them dramatically, we need to make sure that we can show the world that together we can address those challenges and engage.
Yeah, indeed, that rout on the bond markets that Brian's just mentioning, it's been driven in part by high crude oil prices.
It is, Stuart, and those prices are on the rise once again on Monday amid concerns that the U.S.-Iran war is nowhere near a resolution. International benchmark Brent crude now trading just under $111 per barrel after President Trump warned that the clock is ticking for Iran with peace talks remaining deadlocked. U.S. benchmark WTI at over $107 a barrel. It gained more than 10% last week alone. Those rising energy prices stoking fears of accelerating inflation. The U.S. Consumer Price Index hit 3.8% last week. That's its highest level in 3 years, driven largely by higher fuel prices. That, in turn, driving bond yields higher as investors bet on incoming interest rate hikes from central banks. The U.S. 30-year Treasury yield hit over 5.1% on Friday. That's a one-year high. Meanwhile, while 10-year yields are at 4.6%, the UK 10-year north of 5.1%. High oil prices making imports more expensive everywhere, creating a headache, especially for Kevin Warsh, incoming chairman of the U.S. Federal Reserve. Many analysts predicting he may have to hike interest rates instead of cut them. Let's take a listen here.
And the longer that oil prices stay up, the longer we're going to have rising inflation. And this is the first time we've really seen the 10-year inflation expectations cross 2.5%. And historically, that's been very consistent with a period where the Fed has had to increase interest rates.
So what are we seeing then, Brian, on the wider stock markets today?
Well, fears, Stuart, over crude oil inventory sent Asian indexes mostly lower on Monday. The Nikkei in Tokyo down by nearly 1% as a rout in U.S. tech stocks on Friday spreads to Japan. The latest economic data out of China, meanwhile, painting a lackluster picture. Consumer spending, factory output, and investment all coming in under expectations for April. Hong Kong is down 1.5%, with only the Kospi in Seoul staying in positive territory. The latest here in Europe, that is, major indexes opening lower as well. Energy firms gaining on higher oil prices. Most other sectors losing ground, though. Notably, travel and leisure, as fears of a looming shortage of jet fuel rise. Paris off by more than 1%. Frankfurt down 0.5% at the open.
Finally for business, the US's busiest commuter rail network remains shut down amid an ongoing labor dispute.
Well, the Long Island Railroad connects Manhattan with Brooklyn, Queens, and Long Island counties, serving 250,000 commuters each day. It is now offline amid a strike by 5 of the railway's unions. They've been trying for years to negotiate higher wages with New York's Metropolitan Transport Agency. Failed talks led to workers to walk out on Saturday. A continued shutdown could see the U.S. Congress intervene. Caroline Baum has the details.
For the first time in 3 decades, the busiest commuter line in the United States has ground to a halt. Long Island Railroad workers from 5 unions walked off the job at 12:01 a.m. on Saturday, shutting down the line. They say they're striking for fair wages after 3 years of unsuccessful contract negotiations with the MTA.
So all we're here is we're just trying to fight for fair wages for us, fair wages for the other unions, just to keep pace with inflation.
The Long Island Railroad stretches 118 miles through Brooklyn, Queens, and the Hamptons, and carries about 250,000 people on a typical weekday. Commuters over the weekend were left in a bind.
They should have provided something. Even people, for now, this weekend, it started today, but yeah, now I have to spend $100, I think, a little over $100 to get to Jamaica Boulevard.
New York Governor Kathy Hochul is pushing for unions to accept a compromise, and quickly, before the start of the work week.
We all know that the railroad is the lifeblood of Long Island. Without it, life as we know it is simply not possible. The bottom line is, no one wins in a strike. Everyone is hurt.
In a last-ditch effort to settle differences before Monday, the National Mediation Board summoned representatives from both sides on Sunday night. But with negotiations dragging past 10:30 p.m., it may be too little, too late. The governor has asked those who can to work from home and says essential workers can take buses from 6 designated locations in Long Island starting at 4 a.m. on Monday.
A rough commute in New York Monday morning, Stuart.
Yeah, indeed, Brian. Thanks very much, Brian Quinn with Business.